take that conversation forward with Apurva Prasad, who's the Vice President at HDFC Securities. A very good afternoon to you, Apurva. Thank you so much for joining us in ET Now. And so the big question is, what exactly has changed for the IT sector? Of late, we've seen a lot of them actually turning bullish on the IT space in particular. So what's your view? What do you think? What are the changes that has actually taken place in the sector for such a move coming in?
Sure. Good afternoon. Thanks for having me. So we've been saying this for over a quarter now that the growth and earnings cut, which was taking place for the sector, that has bottomed out. So I think that's very evident. The fact that the transition from a protracted IT spend, low discretionary, onto normalization into the second half is the other thing which we have cited. And thirdly, the relative under ownership in the sector always provided a tactical opportunity. That's the combination of these three has led to 30-35% PE rating that we have seen in anticipation of some positive markers. Deal cycles, for example, in some pockets seem to be improving. So I would say that is a positive. Some of the vertical segments within BFSI seem to be the commentary seem to be slightly better than better. So I think there are some signals that the normalization that was anticipated, we are headed towards that, and it was in anticipation of some of that.
Okay, but when it comes to the earnings uptake, which is that space where you're expecting more, do you expect the software companies to benefit more from an earnings upgrade going forward, or will it be the ER and D space?
So I think BFSI exposure, companies with higher BFSI exposure, those could be candidates which potentially surprise on earnings. So that is one way to look at it. The other element is if you look at the guidance that the companies have provided for the year, most of the guidance does not bake in the macros recovering or macro getting better. The certainty of these numbers getting delivered, I think that has gone up. So I would say these would be some of the companies. If I have to name a few mid-tier, the ones that continue to do relatively better versus peers would be Persistent Systems. So I think that's fair amount of consistency in delivery there. And then of course the higher BFSI exposure, so names like TCS and tier ones would be candidates.
So, given the fact that you were mentioning that with the rate cut, the chances of these companies meeting their guidance has gone up. So, do you expect any companies to upgrade their guidance in Q2 or in the second half of the financial year?
So we actually saw that even this quarter with Infosys increasing its the lower end of the guidance that went up. We think from where things are, guidance probably may not change too much because this is for FY25, and any recovery per se is only going to probably impact a couple of quarters from now, and it'll start reflecting the acceleration that is expected in FY26. So it's really a case of greater certainty of the rate of recovery, which was the uncertain part. I think that's probably the reason which is driving this kind of.
Right. So, Apurva, when you look at the way how the IT pack is, it's a pretty vast pack. You cannot single out one particular segment or a company out of that. But if you had to, which side of the fence are you? The large cap IT players, or you think the mid tier companies are the one that will actually outperform going ahead, given that the things are now looking a little better for that space?
So we've been actually positive for the longest period of time on a lot of these mid-tiers. These mid-tiers have been positive. And I think with where valuations are, I would say broadly large cap, the comfort risk reward is probably a lot more favorable. If you just look at the top two names, TCS and Infosys, relative to their 5-year valuation, perhaps company like LTI, Mindtree. So I think on a time series valuation, they would still be more comfortable as compared to some of the mid-tiers that have run up. But I think what we're going to focus on more is the delivery of some of this acceleration. and the greater certainty which will drive multiples from here on.
Okay. If we look at the valuations of the IT companies, some of them are just 5 to 7% away from the COVID highs that we had seen. And with lower growth compared to what we had seen back then, do you expect this warrants some caution when it comes to the IT space, or you're not worried about the valuations at all?
No, certainly. Like I was saying, valuation is a bit of a concern. Certainly, a lot of these stocks that have gone up without any material change to earnings. And if you look at sort of historically where they were, so pre-COVID, if multiples were at 18, 19 times, it surged to 31, 32 times or so before correcting to 22, 23 times. And you had about 2 year period where multiples moved between 23 times and 25 times. What's happened is this 25 times is approached closer to 30 times or so. So you're right, we are closer to the peak multiples, and therefore one needs to have a lot more stock selective approach in the current context, which is what our stance is also.
If you can, then help us with some stocks that you think in the IT sector are beneficial. And I believe you also have a very positive view on ER&D as well as transportation. You believe that they are also companies linked to that. You have a positive view despite what slowdown you are actually seeing in the EV segment?
Yes, I think some segments within ER&D are driving growth. So if you see the transportation sub-segment for the ER&D companies, because a lot of the segments within ER&D has also been a drag, particularly for some of the larger companies. Transportation is one area, despite the EV slowdown, that seems to be delivering for some of these ER&D names. But yeah, I mean, on a risk reward basis, a lot of these stocks have also run up, may not be palatable at the current juncture. But mid-tier space, persistent systems, while multiples can remain elevated, but be sort of confident on the growth leadership that the company has demonstrated. So that would be has been a topic for quite some time. Within the larger ones, like I was saying earlier, LTI, Mindtree, TCS, Infosys, that's where there is relative comfort on valuations, historically.
Thank you, Apurva, for joining us and giving us those perspective and for putting things into context.
If you like this video, then like, share and subscribe to ET Now.